For the time being, we're putting the spotlight on the financial space, and it's time to talk to the management of Chola. Mr. Arul Selvan, President and CFO at Cholamandalam Investments and Finance, is with us. Great to have you back on the show, sir. So, we want to focus on a couple of specific points. Let's just lay them out for our viewers. Number one, we want to understand how disbursements will perhaps shape up. Will there be improvement? Are your projections higher now for the year after the GST cuts? Of course, in the first quarter, we saw some hint of a little bit of a stress in vehicle finance. Let's find out if those trends are changing, if they're easing off. And then, of course, an outlook on the net interest margin. So, Mr. Selvan, good morning. Let's start with the first one, right? The GST bonanza coming through. But, in a very simplistic term, if I just break down the math, let's say if I was taking a loan from you for, 20 lakh rupees for a vehicle, now with the GST cut, maybe I need only a 15 lakh rupee loan. So in an absolute sense, that's lower, but maybe demand will be higher. Maybe Nigel will say he also wants to, buy a new car. So will higher demand offset the actual, reduction in prices? You've told us 20 to 25% growth, AUM growth this year. Will you be looking to increasing those estimates?
You are absolutely right that, there is a value reduction that will happen because of the GST being lower. There are two sides to this GST, reduction. One is the value, the overall, to answer your question, overall, in our view, the AUM growth, we still will hold it at the 20 to 22% levels for the full year. We will be reaching this, and there should be benefit with the number of units being sold because of the reduction in GST. And while that would have a slightly lower impact on the value, so overall we don't want to change it either positively or negatively because of the GST reduction coming into play.
But sir, earlier you said a rough growth guidance of 20 to 25%. Now you're saying 20 to 22%. So is that a slight trimming?
Yeah. There will be, we need to be, I think we even moderated it to 23%. So 20 to 23% is the numbers which we are right now working towards. It will be predominantly driven by mortgage, and then there will be 18 to 20% growth on the vehicle finance. Mortgage should grow around 25 to 30%, which comprises of the LAP, HL, and the SBPL book, which we combinedly call it as the mortgage book. We had consciously taken call on reduction in the CSL business. While we have articulated this, the fintech business has come down. And in the SME, we have slowed down on the supply chain. So these two are taking away some, growth from the disbursement side of it, while it will have very small impact on the AUM growth. So the AUM growth will remain, we still keep it at the 20 to 23%. That would be the level we are looking at for the full year. To just answer another part of the GST implication would, also mean lower EMI burden to the customer, which would mean it will improve credit. Just wanted to add that part to it.
All right. Hi, Mr. Selvan. Good to see you in. On Surbhi's point, Nigel is not looking to buy a car, but if in case I do approach your team, I've got very good credit worthiness, never defaulted. So the track record is clean. Got that. All right. Let's focus on the disbursements then. Earlier you were guiding, I think, for around 10, 12% growth. Do you think ultimately that will come about? Because, quarter two has its own share of challenges, whether it's the floods, whether the economy is still a little bit weakish, and now you'll have, some kind of uncertainty with regard to the rollout of GST, apologies for that. The second half of the year, though, is expected to be far better. Do you think that 10-12% disbursement will be achievable?
Yes. See, you are right. It has always been a case that this Q2 will always be a slow quarter because of rains and also because it has got a fair share of the period coming under inauspicious months, etc. This is more so in the case of vehicle finance. So you will see this impacting disbursement, but certainly we feel that the disbursement would be better than first quarter across all the businesses. While it may not be significantly larger, AUM growth would be better. So as we have always been stressing that we look at AUM growth because that is the one which ultimately brings the interest income rather than the disbursement number per se.
Indeed.
So AUM growth we still hold at the 20 to 22%. We should reach that number for the full year. And certainly the festival season and the good monsoons would augur well for the Q3 and Q4 numbers. That's the current sort of estimation that we run with.
Got that. Mr. Selvan, good morning. Prashant here.
Sure.
Just a quick point. Before, of course, I mean, this will help in many ways, GST. I mean, second order, third order derivative impact, etc. So it's all in the positive direction. But otherwise, across the industry, not for Chola. I mean, Chola is really at the top end of things in terms of growth, etc. But loan growth has been a bit of a problem. I mean, it's not panning out in numbers maybe yet, but feedback is that collections perhaps are taking a lot more effort across a range of financial companies, especially NBFCs. Is that true? And is this something which we will see over the next couple of quarters?
Yeah, it is true to some extent. I think that's the second part of your question, which was initially spoken about. Yes, there is a little bit of a higher stress on the collection, more so in the case of vehicle finance. But I think this again is a routine that we have seen earlier pre-COVID. During the COVID periods, we did not see this because the numbers were very high, and so it did not really show up. But we generally will have this cycle coming, like Q1, Q2 will always be a slower quarters. Q3, Q4 will be always a better quarter in the case of, especially in the case of vehicle finance. This sort of cyclical movement has started happening in vehicle finance post-COVID now that things have settled down. So you'll see that, panning out in this quarter as well as and improving in Q3 and Q4 when the festival season starts. This is primarily because the vehicle operators get more loads during the period of festivals and the harvest, which is when they will earn more and they will, be able to service the loan better. These are earn and pay type of customers, especially our customer profile. So there will be these sort of a slight fluctuations between the quarters.
My question was a little more broader, not the segment per se. I mean, if you rewind the clock, right? I mean, tightening by the RBI started sometime, I think, in late 2023, right? Risk weights went up, what banks lent to NBFC, and of course, what NBFCs further lent out. Then this MFI issue, trouble started sometime in middle of 2024, right? Q1, Q2 of 2024. That segment, especially the MFI segment, because it touches so many households. I think 7-8 crore borrowers. So the number of households it touches is enormous. The spillover of that, I mean, is that fully understood? I mean, the slowdown in that space, while that segment may see repair and recovery, and we talk about it from a stocks angle, but is that critical for reviving lending growth? There is a bit of a pause. And that needs to start again. That cycle needs to start again. Is that an issue?
See, both the MFI and the personal loan type of lending segment is based on unsecured lending, where there is no underlying security being offered by the borrower. So there is a tendency that these segments would grow faster when there is a lot of demand, and because this leads to sort of over leveraging by the customers. But in a secured lending, ultimately the borrower has to bring a security to the table to take a loan. So in a secured lending, this becomes a little bit more organized or a little bit more controlled, that they have to find a security to start or to come and offer for a lending, whether it's gold, whether it is vehicle, whether it is mortgage. The second thing is when you are lending to a business purpose rather for a consumption purpose or a discretionary spending purpose, then the responsibility that you see with the borrowers is much more significant compared to a discretionary borrower. Or a borrower, or a person borrowing for spending on a discretionary item, like buying a expensive bike or buying a consumer durable, which are not really up to his living standards. So this over leveraging tends to happen, especially like recently we're seeing a lot of people going on holidays, borrowing, which is, these things make them borrow and then get into trouble. So this is being what is getting curtailed with the recent actions of RBI, and this is where you are seeing this reduction happening. So the unsecured lending is where you will see more of these failures, and that's what we have also been slowing down on the unsecured side.
Sure. Speaking of unsecured, Mr. Selvan, just give us an overall picture on how asset quality and credit cost is moving, because in the first quarter there was some niggles over there and there was a slight rise in credit cost. If I have the right numbers for the full year, I think you're guiding for credit costs to be roughly 1.5%. So just tell us how the trends are shaping up in Q2 in across various segments, whether it is vehicle financing, LAP, etc.
Yeah, see, for the full year, the overall credit cost would be in the range of around 1.5 or even 1.6%, as somewhere equivalent to last year levels. And if, God forbid, the monsoon gets extended into Q3 like it happened last year, then it can even be slightly higher. But going by the trend to now and going, as I said earlier, the GST impact will also have a better or implication on the collection side, because the ability of the customers to pay becomes more is improved because of that lower burden on the EMIs. These things should start playing out, and that would have a positive impact. So we will be in the range of around 1.6% on the overall NCL level. With regard to unsecured, the increase you are seeing is primarily because we are not growing the book on the fintech. So when the growth is not happening and you are cleaning up the book, this generally tends to move up, and that's what we are experiencing.
Sir, on the credit cost, I mean, your exposure to the north is very less. But given that you are present slightly, could that add some more pressure, upward pressure to credit costs because of the massive flooding and disruption that we've seen?
Yes, it does in the segments like Punjab, Arunachal Pradesh, etc. But thankfully, in those particular states, our exposures have been minimal. But this is something which happens every year. Sometimes there's flood in Kerala, like there are years when there was floods in Kerala or in West Bengal or in. So, if you look at our geographical spread, we are not concentrated on any state where our share of volume is even in double digit, maybe other than Maharashtra. So to that extent, a system is built. That is the whole point of this diversification with regard to business, with regard to geography, with regard to customer profile. It helps us manage risk when certain pockets get impacted.
Got that. Very, very useful conversation. And Mr. Selvan, those holiday loans are real, sir? I just thought they were...
Oh, they are plenty, but we don't do that.
Loans for holidays?
Yes. It's a standard. You can get offers on the on any app.
I have to get leave first. Then I will All right. Thank you very much, Mr. Selvan. I appreciate you joining us, and important differentiation. And I think that's why you've done well with regards to some of the secured lending that you're doing. But yes, on the unsecured side, it is a bit of a problem. We'll take a quick commercial break here.